The date is set. The final green light has been given by the SEC. The spot Ethereum ETFs are officially coming, and they are about to trigger the largest and most violent rebalancing of capital this market has ever seen. While billions of new institutional dollars prepared to flow in, an even larger, older pool of trapped money is waiting impatiently to flow out. This isn't a simple bull or bear event. This is a financial hurricane. And in the eye of the storm, only those who understand the conflicting forces at play will survive. In the next few minutes, we are going to dissect this hurricane, revealing the hidden dangers and the profound opportunities that are about to be unleashed. Let's begin with the event that has dominated the conversation, the imminent launch. This week, the SEC officially approved the S1 registration statements for multiple Ethereum ETF issuers. Trading is now scheduled to begin in the second week of July. This is the moment the Ethereum community has been waiting for. It's the final stamp of institutional legitimacy, placing Ethereum on the same pedestal as Bitcoin in the eyes of Wall Street. Analyst predictions are flooding in, with consensus estimates from firms like Bloomberg Intelligence and K33 Research pointing to potential inflows of between $10 and $15 billion within the first year. This creates a powerful, sustained demand for the underlying asset ETH, as ETF issuers must purchase it on the open market to back their shares. This is the bull case, the tidal wave of new money that many believe will ignite the next major leg up for the entire crypto market. But every force has an equal and opposite reaction, and the opposite reaction to the ETF inflows has a name: Grayscale. We are about to witness the Grayscale ETH bomb. For years, the Grayscale Ethereum Trust, or ETHE, was one of the only ways for traditional investors to get exposure to Ethereum. It now holds billions of dollars worth of ETH. However, it's a high-fee, closed-end fund that has often traded at a significant discount to the actual value of the Ethereum it holds. Investors were trapped. With the conversion of ETHE into a spot ETF, those gates are about to be blown wide open. We saw this exact movie play out with the Grayscale Bitcoin Trust, GBTC, in January. For weeks after the Bitcoin ETFs launched, GBTC experienced a relentless, multi-billion-dollar wave of outflows that suppressed Bitcoin's price and muted the initial rally. Investors fled the high-fee Grayscale product for the new, cheaper ETFs, or simply cashed out now that they finally could. We must expect the same, if not a more severe, bloodbath for Ethereum. A massive, predictable wall of selling pressure from ETHE is going to meet the new wave of buying pressure head-on. This clash will define Ethereum's price action for the rest of the summer. However, there is another powerful financial event brewing that could act as a crucial counterforce to the Grayscale selling pressure: a massive wealth effect airdrop. This week, after years of speculation, MetaMask, the world's most popular crypto wallet, finally announced its long-awaited token and governance snapshot. This is a monumental event. MetaMask is not some niche protocol. It is the primary gateway to Web3 for over 30 million monthly active users. An airdrop to its millions of loyal long-term users would be one of the largest wealth distribution events in crypto history. This will instantly create billions of dollars of wealth for everyday crypto users around the globe. While some will inevitably sell their new tokens for cash, a significant portion of this free money will likely be rotated back into the ecosystem. Users will use their newfound capital to invest in other DeFi protocols, buy NFTs, and explore Layer 2 networks, creating a massive organic wave of buying pressure and on-chain activity. This grassroots stimulus package could provide the crucial liquidity needed to absorb the wave of selling from the Grayscale ETHE conversion. It's a battle between the old, trapped institutional money and the new, decentralized stimulus. But while the market is distracted by the chaotic drama of Ethereum, a quieter, more profound revolution is continuing to be built in the background. This is the rise of real-world asset, or RWA, tokenization. This week, the RWA protocol Centrifuge, which runs on its own parachain connected to Polkadot, announced a major partnership with a leading private credit firm to tokenize a portfolio of their loans. Let's be clear what this means. They're taking traditionally illiquid assets, loans made to mid-sized businesses, and placing them on the blockchain as digital tokens. This unlocks a global pool of liquidity for these assets and allows for more efficient, transparent, and accessible credit markets. This is not about speculative hype. It is about upgrading the fundamental plumbing of the global financial system. While traders obsess over the short-term price impact of the ETFs, the long-term sustainable value is being built in sectors like RWA, which will eventually bring trillions of dollars of real-world value on-chain. Finally, let's look under the hood at what the on-chain data is telling us about investor behavior during this period of extreme uncertainty. A key long-term metric called dormancy flow is currently painting a very interesting picture. In simple terms, this indicator compares Bitcoin's current market price to the spending behavior of the oldest coins in the network. When old coins are being spent heavily, it suggests long-term holders are taking profit and the market is overheated. When this metric is low, as it is today, it signals that old coins are remaining dormant. This indicates that the smart money, the oldest and most experienced market participants, are not being shaken out by the short-term volatility. They view the current prices as a period of accumulation, not distribution. They are weathering the storm, confident in the long-term thesis. This hidden data provides a crucial counterpoint to the surface-level fear, suggesting that while the traders and short-term holders are panicking, the long-term believers are holding strong. So we stand on the precipice of a great rebalancing. The Ethereum ETFs will not be a simple up-only event. They will trigger a violent clash between a tsunami of new institutional buying and a torrent of old institutional selling from Grayscale. This cosmic clash will be met with a massive decentralized stimulus from a potential MetaMask airdrop, all while the real-world adoption of the technology continues quietly in the background. This is the most complex and fascinating setup the market has faced in years. It's a moment that will be defined by volatility, but underneath it all, the smartest money in the world is remaining calm. If this deep dive helped you understand the powerful forces about to be unleashed on the market, please support our channel. Like this video, comment below with your prediction for the ETH ETFs, and share this video with a friend who needs to prepare for the coming volatility. Be sure to subscribe and hit the notification bell so you don't miss our next analysis. Thank you for watching.